Well, I'm going to explain to you now. I'm going to take some time and explain to you why we're in such trouble and why the whole thing is linked to oil, and where we're going and how the whole thing's going to come down. The economy is like a giant engine, and there's a lot of cogs and wheels on it, the whole thing, and it's a very complicated machine. And this is why it's so difficult to forecast the economy, because there's so many different things that can affect different other parts and pieces. It's almost like a big giant engine, like I say, cogs and wheels, and one thing affects the other thing, and affects the way one turns, affects the way the other one turns. It's very complicated. The first thing is, you have to understand that this is an oil-based economy that we have here. The price of everything is based on oil, and the dollar is tied to oil. It's not tied to gold, it's not tied to silver, it's tied to oil. That's why it's called the petrodollar. The dollar is not backed by nothing at all. All these guys out there who say, oh, the dollar is fiat currency and fiat's backed by nothing, that's not true. The dollar is backed by oil. So the dollar is determined by how much oil you can buy with it. So the more oil you can buy with the dollar, the more the dollar's worth. And so when the oil price drops, it supports the dollar. It supports the strength of the dollar when the oil price drops. Because of a deal that they did years and years ago, Kissinger was involved in it, that they would only sell oil for dollars. Saudi Arabia and OPEC would only sell oil for dollars, and this gave the US dollar, this is what really made it into the world reserve currency. It's the petrodollar. Now, here's the thing. When the oil price goes back up this time, it's not like other times when the oil price went up. When the oil price goes up this time, the dollar is going to take a major impact, because the dollar has been weakening for years. It's been eroding. The petrodollar has been being eroded, and now it's finally reached the point where the petrodollar can actually crash and burn. And so it's very important that oil prices stay cheap to support the dollar at this point. The question is, when will oil prices actually go up? Now, it started to look like the West Texas oil fields, this is in an area called the Permian Oil Basin, we're starting to go in decline. Starting to go into a decline. This was last year. And the oil rig count, that's the count of oil rigs in that particular area, was dropping drastically. What they did was they made further investments, and they increased the oil rig count unexpectedly. I didn't expect them to do this. I was forecasting on this back at the turn of the year, back around January and stuff, and at that point the rig count was still dropping, and then the rig count started to increase. And of course that means more oil being pumped into the world's markets. The tanks that were already full started to brim with more oil in them instead of the oil declining in the tanks. And then the prices started to actually roll over again. Now the price has rolled over to the point where it's around 43 a barrel. This is significantly low. This is low enough to keep the dollar supported. Plus, they keep hitting gold and silver. They keep pounding it. Just this morning, they hammered it. And we're so used to them hammering it. I mean, they're trying to shake out weak hands, for one thing. Anybody who isn't strong and it doesn't hold tight can actually sell back into the market, and they just keep nailing these things. So getting back to why we're in so much trouble is the Fed. You've got bond rates, right? And you've got interest rates, that they've been raising interest rates. Now, what they've been doing is, there's such a thing as called the yield curve. And how the yield curve works is, On the lower end of the yield curve is the short-term rates on like overnight rates on your bonds. This is where they've been raising the rate, and so they've been raising it up. It was down around 0. It ran for 0 for years. They've been raising it up by 25 basis points each time the Fed has, and now they've got it up to 1.25%. But on the other end of the yield, when you get out to the 5-year, 10-year, 30-year treasuries, those rates have been dropping as of recently. And so what this has been doing is, because the rates on the low end, on the short term, have been going up, and the rates on the long term have been going down, what this has been doing is this is actually what's called flattening the yield curve. Now, this is something that the Fed cannot allow to happen, this flattening yield curve. They hate it. And I'll explain to you why they hate it right now. At least I'll try to explain to you why they hate it. Why the Fed hates it is because of bank lending. Why on earth would a bank lend money out, like on a 30-year mortgage or whatever, when they can get more money on the short end of the curve, on the overnight rate, with a much shorter term loan? So the banks are going to gravitate toward these short, when the yield curve gets inverted like that, the banks are going to gravitate toward the short term stuff, where they can make a quicker profit, and they're not going to want to lend out on the long term, on the long end. So in order for the banks to make a profit, and let's face it, the Federal Reserve works for the banks, they need to get that long end of the yield curve up, see, instead of it dropping. And I'm going to tell you the reason why that long end has been dropping. It's been dropping because all of these other countries have been buying their own bonds, like Japan. Japan's been going into the bond market and buying their own bonds, and they've been driving the yield down lower, down to 0, right? And so nobody wants to buy those. So what are they buying instead? They're coming over and buying U.S. Treasuries, because at least they got a better yield. They can get a better yield. And it's the same way over in Europe. They're coming over and buying U.S. Treasuries, and that's been driving the yield down as of recently. So you got your yield dropping, right? And so that's inverting the yield curve. So now the Fed says to themselves, well, how are we going to get this yield curve on the long end back up again? Sell our toxic assets into the market. And that's exactly right. And this is why their hand is forced. This is forcing their hand. It's forcing their hand to sell these toxic assets back into the market. And when they start doing that, what they're going to start to doing is they're going to start, when they start selling their balance book off, probably later this year, you're going to see then the Treasury on the long-term yield start to go back up again. Yields will start climbing again. You know? And so interest rates then are going to start to go up. Now, why I say we're in so much trouble, I'm going to try to explain it to you, why we're in so much trouble. Because now, as I've explained it to you, you now realize why the Fed is absolutely forced, because of their mandate and everything else, they're going to be forced to sell the toxic assets on their balance books. Plus, they're going to be forced to raise interest rates more on the lower end as well. So interest rates are going to be starting to go up toward the end of this year. Now you know why, and they're going to have to. So interest rates will start going up on the long end and on the short end. And why I say we're in such a mess is when these interest rates start to go up on both ends. It's like burning the candle on both ends. And in the middle. This is going to be a mess. And the reason why this is going to be a mess is because you got your housing market, which is in an enormous bubble right now. A bubble like that's never been seen before. Take these cities like San Francisco, for instance, and places like that. Terrible. The prices. And here in Canada, too. Just ridiculous, the prices for homes and stuff. It's an enormous bubble that's been blowing up by all these years of zero interest rate policy. People buying houses to infinity, driving the price up. What do they even buy them so that they can what's the name of it when they come in? They buy a house and they sell it real quick. I can't think of the name of that right now. Flipping. They're flipping. Who thought up that name? Flipping. It's flipping stupid is what it is. So anyway, so when these interest rates start to go up again, what do you think's going to happen? What do you think's going to happen to the real estate bubble's going to pop? The whole thing's going to pop simultaneously, and not just the real estate bubble this time. What about all these bloated industries on all these car lots and stuff? Cars, you can see them for miles. You stand in the car lot and you look out there and there's brand new cars out there for miles. They've bloated their inventories. Filled up all these car lots with all these new cars. They ain't going to be able to sell diddly squat. We're going to go into such a hard recession that you've never seen anything like it before. It's actually going to be a depression. It's not really a recession. See, that's what I've said before. They're going to call it a recession. But it's not a recession. It's a depression. We're heading for a depression. An actual depression. Now, here's the reason why we're so messed up. Is when this depression hits, it's going to hit suddenly. It's going to hit hard. Probably this fall. When this depression hits, the Fed is going to react to it at a certain point to try to squish it. But before that point happens, all of these deflationists, like Harry Dent, and there's other ones. I keep picking on Harry Dent. I shouldn't pick on him. But there's a lot of deflationists out there. They're all going to be saying, hey, listen, we were right. You know, we were right all along. And they will be, because we're going to be in a period of significant deflation. And now that deflation is going to take the steam right out of the cryptocurrency market, most likely. I'm thinking it will, and the gold and silver. It's not going to be roaring hot, because everybody, believe it or not, you would think that they would have the smarts to go into the cryptocurrencies and go into the gold and silver, but they're not. Where they're all going to run when this deflation hits is into the dollar. As a safe haven. That's where they're all going to run. They're all going to run into the dollar as a safe haven, and the dollar is going to get its last legs. What I mean by last legs is it's almost like a runner in a race. He comes on his what they call second wind, and he gets that last spurt of energy. In this case, it's going to be the last spurt of energy before the dollar falls flat on its face and it's dead. And this is going to be its last hurrah. The old saying, the last hurrah. So they're all going to run into the dollar. This is what's going to happen. And they're going to actually sell their cryptocurrencies. They're going to sell their gold. They're going to sell their silver so that they can all get into the dollar. Isn't that sweet? Isn't that sweet? They're all going to be hugging the dollar and kissing the dollars and getting into the dollar. And that's when they're going to meet their demise, because I'll tell you what's going to happen next. Is at that point, what they're missing, all these people that's running into the dollar at that point, because dollars are going to be scarce during this depression that's going to hit. I'm going to call it what it is. It's a depression. It's not a recession. It's a depression. Dollars are going to be scarce. Everybody's going to be running into the dollar. Buying power of the dollar is going to be going up. This is the thing, and what's going to happen then is what they're missing. It's what they're missing. What they're missing is the reaction of the government. The government, what they're missing is the fact that they can print more dollars. Actually, they don't even have to print them now. They just have to push a button on a machine, and that creates dollars. Those dollars can be created more than there's leaves on the trees. And believe me, they will, because Ben Bernanke already says to fight deflation, we will print up a bunch of money and throw it out of helicopters. And they're going to do this. They're going to make the money bombers. They're going to bomb us with money. They're going to pour this money out from every different which way. And that's when they're finally going to kill the dollar, because confidence is going to be lost in the dollar. All these people that have been hoarding dollars are going to try to get out. It's going to be a panic for them to get out. Then at that point, suddenly, they're going to suddenly realize that the building's on fire. That the government is going to print these dollars to infinity, and everybody's going to try to panic and get out at the same time. And it's going to cause a log jam of people trying to get out of the dollar all simultaneously, because all confidence is going to be lost. And that's going to be such a steep decline in the dollar so fast, it's going to shock all the markets, and everybody's going to be trying to get out simultaneously. I heard, I'm going to copy one of the he's a really good economist, and I'm going to copy what he said about it when this thing hits. He said that it's going to be like Niagara Falls trying to get through a garden hose. Seriously. I heard another economist say that it's going to be like a big football stadium inside. It's all full of elephants, and there's one exit door, and all the elephants are trying to get out through the door at the same time. This is what it's going to be like. They're all going to be trying to get out of the dollar simultaneously. And there's going to be no real way out, because the people who have the smarts to have got into the alternatives are going to be going straight up at that point in value. And let me just ask you, if you had 1 ounce of silver and it's going up, say 10% daily, every single day, day after day after day after day, would you sell it to a guy there who's standing there offering you US dollars for it, if you know it's going up, and it's going up 10% day after day after day after day, and he's got dollars and his dollars are going down 10% day after day after day after day? What would you want to sell it to him? Maybe no price at all. Maybe you'd say to yourself, well, I'm not selling it for any price, because I know no matter what I sell it to you for, I'm going to lose, because I'll be stuck with those dollars that are going on their way to zero, and mine is going to go all the way up. My piece of silver is going to go all the way up to infinity. Where's it going to stop? In the end, they won't be able to buy it for dollars. And this is the way it's going to go, because the dollar's heading into a hyperinflation. All confidence will be lost in the dollar, in the buying power. And all those people that ran to the dollar when the deflation initially hit, when it switches over to hyperinflation, they're all going to be trapped, and they're not going to be able to get out. But now here's the thing, and this is where it gets interesting, toward the cryptocurrencies. And this is the point I wanted to get at tonight. When I say that the deflation hits, now it's going to be tricky. You should already have a position in cryptocurrencies and gold and silver when the deflation hits. And there's a reason why, is because it's a possibility that when the deflation's on, that you might not, it might be hard to buy them. It could be. But if you can buy them, you're probably going to get your best bargains during the deflationary period. If you don't run the way everybody else is running, if they're all running into the dollar, and the price is actually dropping on cryptocurrency and on gold and silver, if you run into the cryptocurrency and gold and silver instead of running into the dollar, even though the price is dropping on the stuff, then when this whole thing turns, that might be the best position to get into, if you understand what I'm saying. And this is kind of what I'm thinking in my head, you know. And so I'm half expecting the price of cryptocurrencies to drop, not significantly, but to actually drop when this deflation hits, to fall, the price to fall. And also the price to fall on gold and silver a little bit, not a lot, but a little bit. And it's only going to be short-lived, because the government's going to step in, and then the whole thing is going to go in the opposite direction. But when it does go in the opposite direction, it's going to go so fast that if you're waiting for that tail end, and then you say, I'm going to get in, I'm going to buy when it's at its lowest, you might miss it. You might go to bed one night waiting for it to get lower and the deflation's getting worse, and you might wake up the next morning and tune in on the news and hear the government has released all these stimulus programs that morning early before you even got up. And all of a sudden you go in to buy what you plan on buying, and the price has gone absurd, and it's just that quick. You didn't get a chance to even get in. It might be that fast. And so you got to position yourself carefully, and you got to do it when you can. You're probably the safest way is just to forget about price and start positioning yourself now. Because you can't lose that way. Because ultimately, when this whole thing goes down, what's it matter if you paid... say Bitcoin goes to $1 million a piece. What does it matter whether you paid $1,500 or you paid $2,000 or you paid $2,500 for your coin? Now it's worth $1 million. You know? So it's probably actually the safest way is to actually just go ahead and position yourself. Try to hit the lows as best you can. Try to buy the dips as best you can. But position yourself and hold. That's probably the best way. And when you see this deflationary period, if you see it come, like I say, then get a little bit more. Stock up. Stock up. But don't stock up in dollars. I'm telling you. Now the thing is there is something, there's two types of dollars as far as I'm concerned. One, there's physical dollars, and then there's electronic dollars or digital dollars. It wouldn't be a bad idea to have just a little bit of the physical dollars on hand. Wouldn't be a bad idea probably to have a little bit of that on hand just in case. Because if the banks all close and everything, there might be a very short period in time there, you know, when people don't recognize silver. And they might take that, and if the banks are all closed and you can't use your debit card anymore, and you can't use your credit cards anymore and stuff, you might need to have a little bit of cash on hand. But I wouldn't recommend too much, just a little bit, just to tide you through in case the banks do close on you in this crisis that's coming. So anyway, I think you're getting an idea now of what this thing is going to actually kind of be like, and why we're so messed up, why this thing is actually coming. The Fed is actually forced into moving into these positions. Also, another reason why this Fed's going to sell their toxic balance book and why they have to raise interest rates is the Fed is actually stuck right now. They're stuck. They can't move back, and they can't move ahead. They can't go down to a lower interest rate policy. They're trying to. They know this recession is coming, and they're trying to get themselves a little bit of room to drop when it hits. They're trying to get as far off of the 0 point, the 0 mark as they can. They're trying to get up higher. Because they're in a panic mode, the Fed, right now. People don't realize they're panicking. Janet Yellen actually got out there. She was giving a speech not long ago. And she started to actually have some sort of a fit or whatever during the speech when she was having to talk about certain subjects that pertain to this crisis that's coming. You know, and she choked up. She choked. She couldn't get the words out. And they said, oh, she was dehydrated and stuff. I say baloney. She wasn't dehydrated or anything like that. So anyway, I've probably talked enough. Thank you for listening. Like and subscribe, and we'll catch you in the next show. Bye.